Guess what? People aren't thrilled to be in the market right now. Well, shore up your other risk management concerns, such as life insurance, disability, things like that, that you can rely on will be there even in a down market. And people might scoff at that and say, oh, well, insurance companies suffer too. I guess they suffer a little bit in terms of their stocks maybe going down, but guess what? Insurance companies survived the Great Depression. They survived the Great Recession. They've done generally really well, whether it's good times or bad times, because they know how to take care of money. If you want a solid investment, invest in something backed up by an insurance company versus being backed up by a bank. Hey everybody, Matt McKay, Safeguard Insurance here. It is the final episode of our IUL series. We have talked about all kinds of different things. What is it? What's good and bad about it? What about if I want to put it in for my kids? What if I don't really understand what the heck you're talking about, Matt? What about taxes? Well, the final episode, I want to get into what the IUL is really designed for. Now, there are different purposes and different ways that you can use this. I talked about that. You can use it for cheap, permanent insurance. You can use it if you just want some extra coverage and, hey, it's okay if it happens to run out of cash at some point. You could use it for extended term insurance, which I didn't really talk about. Basically, you make sure that you pretty much have it funded, and then if it doesn't work out, it's going to last longer than a term and may not cost much more than a term. But guess what? The reason that IULs really exist is so that people can have options, especially people that have some extra money, to be able to take care of some things and set themselves up to be able to do different things if they want to. First of all, again, I stress this because it's important to me. It's still life insurance. It covers you if you die. If you got $1 million policy and you just bought it, it pays $1 million. If you got a $5 million IUL, it pays $5 million. If it's a $25,000, it pays $25,000. Okay, that's the first thing. Death benefit, it's there. If it's active, it's paying, and it'll pay as long as it's funded. As long as it's got $1 in it, it'll still pay. Even if you got $1 in the cash value, $1. So it's a really nice option in terms of death benefit and other ways that you can use it. But again, the main way that I really want to get into is tax-free retirement strategies, especially for high earners. Okay, so I've talked about it several times in the other videos, but now I want to focus on you, the person that has some extra money, or that is, looking to maximize the possibilities, or maybe you're up to the match on your 401k, but you're concerned about the market and you want to put it in something that you can get some growth in, but not risk it completely in the market. That could be an option. Say you get a 3% match, you've done your 3%. Now you've got 10% of your income that you want to play with and put in something else to be sure that you diversify your tax burden, or put it in something that is not in the market. So IUL, especially in a down market like it has been lately, it's now officially a recession. Guess what? People aren't thrilled to be in the market right now. Well, shore up your other risk management concerns, such as life insurance, disability, things like that, that you can rely on will be there even in a down market. And people might scoff at that and say, oh, well, insurance companies suffer too. I guess they suffer a little bit in terms of their stocks maybe going down, but guess what? Insurance companies survived the Great Depression. They survived the Great Recession. They've done generally really well, whether it's good times or bad times, because they know how to take care of money. If you want a solid investment, invest in something backed up by an insurance company versus being backed up by a bank. That may not be a popular opinion, but historical facts speak the tale there. So tax-free retirement strategies. Again, you've got your three different ways to be taxed. Okay, and you can go look at the other episodes for that. But basically, you've got your taxable bucket, your tax advantage bucket, and your tax-free bucket. Okay, taxable bucket means when you pull it out, it's getting taxed. Okay, retirement, whatever, IRA. Tax advantage means it has some tax advantage, but you're still going to have some taxes. Okay, and then your tax-free bucket is you don't pay a red cent to the IRS, and you get the money that you just asked for. Okay, it's pretty nice to be able to, stick it to not Uncle Sam, stick it to the IRS. You know what? I don't have to pay taxes because I prepared and I took the money that I had and diversified it. So now I have choices and I don't have to pay you. Wouldn't that be nice? So an IUL is a perfect vehicle to do that. Basically what you do is you come to me and we do some planning and things like that. And we figure out that you basically got $20,000 a year to play with. Okay. What can I do with that? Well, we can set up an IUL, Index Universal Life, and we can figure out the death benefit that makes sense. Basically set it up so that you get maximum cash value, minimum death benefit. And what that does is it drives down the charges that come out of the cash value and gives you more pure growth to be able to grow that fund to where you have options later. When you look 10, 15 years down the road, you've turned a tangible profit on the money that you put in while investing in life insurance and having a really nice bucket of retirement options. Okay. I think that really could be huge for a lot of people because you've looked at it and you've done your research and really it's like, is your option, do I go to a brokerage account and basically anything I gain, I've got to pay taxes at some point? You could do that. But number one, you're hanging out in the market. You have that risk. Also, you still have some taxes that you're going to have to pay. If you have $50,000 or $100,000 or $10,000 or $5,000 or whatever, that's just extra money that you can put into life insurance. You can set it up so that you get a huge profit off of your money while protecting your family on the way to potential generational wealth. These could be ways to pass on things to your heir or heirs. This could be a way to help your estate planning. If you have a huge estate, if you put your money in life insurance, that doesn't go to your estate. It doesn't go through probate. It doesn't have to do any of that. It goes straight to whoever you say gets the money. If it's a $50 million policy, boom, it goes to your son and your daughter or to your church or your favorite university or whatever. Your favorite charity, or half of it goes to the kids, or screw the kids, I'm giving it all to the grandkids because they're actually nice to me. Whatever it is, you've got that option that is sitting there to build all kinds of different avenues for yourself. And I haven't even talked about this in the other episodes, but they have riders that you can set up for long-term care to take care of some of those concerns. And if you're younger, maybe looking at like a waiver of premium where if you get disabled, it waives the premium the rest of your life and it still builds cash value going forward. All kinds of things, accidental death, living benefits, those can all be in Index Universal Life policies in addition to providing you maximum cash value, and providing a really nice vehicle for you to put your money in and do something with and have options down the road. If you're sitting there and you've done your 20,000 that you can put into the 401k or so, you've done your max IRA, you've done all that. Where else can I put my money? I get that question a lot. This is the way to put more money away, and really set yourself up nicely. And so IUL, for those of you that maybe are looking to put some extra money away, it's a great way to do it. Good luck. Give us a call. We'll help you set it up. It's really not that hard. Easy peasy. See y'all. Hope y'all have enjoyed this. Like and subscribe. We're going to come out with more series as well. Take care.